Well, welcome back to You Heard It From a CFP. My name is Matthew Coyle. Today is July 19th, 2021, and today we're going to talk about investing. We're going to do it a little bit differently, though. I'm going to tell you why I'm as optimistic about the markets and the world in general as I've been in 20 years of being in this business. So, why is that? Let's dive in. What if I told you that as recently as 1982, almost half of the world's population lived on less than $3 a day? That number today? About 10%. Now, this week's topic is all about being a good investor, and we're going to approach this from a standpoint that I think rarely gets discussed. Most people want to talk about what funds to buy and what stocks to purchase or what not to purchase, what asset classes, what sectors you want to be in, and that's all fine. We can do all that. But I think to be good investors, we have to have a genuine and factually based optimism that the world is actually getting better. Here's a few examples. Young people, as a percentage of the population, at its highest rate in generations. Life expectancy around the world dramatically increased over the last 100 years. Healthy individuals. Years and numbers of schooling, average age and average number of schooling. The time spent in school by a young person today at its highest rate in generations. And as probably an extension of that, mortality rates under the age of 5. Lowest we've seen in a generation. Rates of child labor. Lowest we've seen in a generation. U.S. crime rates. Lowest in 50 years. Dramatically down. Even the metropolitan markets that have seen a recent spike, like New York and Chicago, down dramatically over 50 years. Now, these are just examples, but it speaks to a fundamental optimism that investors have to have, that the world is getting better, and a recognition, not a belief, but a recognition of the fundamental, factually based reality that as investors we all have to share, and that is that the world is getting better. Now, how do we act on that? Well, the world of mutual fund investing, stock investing, investing in general can be largely automated these days, and it's very cheap to get in. And it's never been more accessible. So, let's talk about being a good investor and what that means. You know, this investing thing is pretty funny, you guys. I've been doing this for over 20 years now. And when I first got into this business, investing actually was quite expensive. The average trade was about $85 to place a trade. I remember placing trades when I was younger at about $85 a pop, and now it's largely free. The world of investing has largely been automated, and it's become more of a behavioral exercise than anything. So there have been roughly 7, I think it is, economic expansions since 1970 in the Western world. An average market grew in average of 37 months past the observed economic peak during that cycle. So really the issue is not when to invest or how to invest, it's just being invested. Roughly 5% of all trades placed in the market today are placed at the worst price observed, or best price for the buyer, over that last preceding 12 months, which means, by definition, and by extension, 95% of the time you buy or sell something, particularly on the buy side, you're going to buy at a price that was not the best price during the previous observed 12 months. Now, does this hurt you as an investor? No, in fact, it's usually a precursor of better things to come. A 20-year-old, starting with just nothing, investing $400 a month at a 7% rate of return, will be a millionaire by age 60. Now think about that for a second. A millionaire by age 60, including other assets, likely to be a home, maybe a pension, Social Security. That's a pretty comfortable retirement. But getting people to that point is largely behavioral. So what could you do to help yourself be a better investor and improve your odds of success? Here are some ideas. Okay, so what are 3 things you could do right now to improve your odds of being a successful investor? Number 1, automate, automate, automate. Get your savings into a plan of some kind, whether it's through an advisor or doing it yourself. Most firms, almost every firm I've ever seen these days, offers some type of automated plan where you just buy index funds, recurring dollars going in, it comes out of your checking account automatically, or if your employer offers a 401k plan, please take advantage of it. Even better if they have an automated deferral rate on the election, which bumps you up. Please take advantage of those as soon as you can, especially if you're a younger investor. Number 2, understand the odds of success. The odds of success as an investor are in your favor. I run into a lot of people who mistakenly believe that the market is down, say, half the time or down 40% of the time. It's not actually true. If you look at the S&P 500 as a market proxy, over the last 75 years, it's up on average 3 out of 4 years. That's a lot of compounding you could be missing out on. So understand that the odds of success are in your favor. And this kind of does go back to my original point of this video, being a good investor, being optimistic, rationally and reasonably optimistic. Over time, the world does improve and has improved for quite some time. The odds of success are in your favor as an investor. So please understand that and do it as quickly as you can. Get that money in. Time in the market is far more important than timing the market. You're never going to buy or sell at the best price, so don't expect it. And trading will just lead to destruction for your personal finances, so don't even bother. Most people just trade themselves down to zero. And finally, number 3, mind the details. Understand your personal finances. Where is your money going? You don't need a fancy spreadsheet. You don't need fancy software. Basic software will certainly help you. There's great aggregation software out there. We offer one, of course, but there's tons of them in the market. Understand where your money's going. I'm amazed when I sit down with people and they've looked at their finances and with a little more detail, and it's amazing how many of them find $100, $200, $500 extra a month they can invest just by simply cutting out unnecessary subscriptions they never use, or gym memberships they never go to, or whatever it is. Just understand your finances and where that money's going, and I think that would go a long way to improving your odds of success as well. So those are 3 things you could do. Automate. Number 2, understand the odds of success are in your favor. And number 3, mind the details. Understand where your money's going. I hope those are helpful. You might as well call this the Call to Optimism video. Maybe I should retitle it, but whatever. So have a very nice day, and thanks for watching. Again, I'll see you soon. Bye.